Good evening, good evening, good evening. How's it? Teji and Brenda, good evening. And they've come and they've gone. Good evening. Montlimacho, Sia, Yochi, Nico, Wayne. How's it, folks? Good evening. Oh, maybe I should do this, then I can actually read what's going on here. This shirt is obviously not conducive to this little exercise. Anywho, how's it, Larry? Good evening, Francois. Hello, Charlene. Nice to see you. Lady G, would you be Lady Gaga's friend? Hello. Dit gaan goed, baie dankie. Sorry, let me just do this so that I can read better because this shit is not working very nice on the writing here. I'm not freezing. It's not that cold, as a matter of fact. I feel it's a bit hot, but so be it. I am well, thank you very much. How's it, Wayne? Good evening. One mic out. Good evening and welcome. Folks, to you that's not been on a TikTok live yet, I answer questions. I try and answer whatever questions you have in terms of financial advice. And we've got about an hour for me to do it in. And then I go and have supper. And then I go to bed. So for those of you that are here, please start popping in your questions. And let's see if I can help you. Oh. And it's a bit chilly here in Krugersdorp. Not chilly, but enough for my nose to keep on running. So excuse me when I wipe it every now and again. Fusigazi. I hope I pronounced that right. Good evening, Keswa. How's it, folks? Mosterdgesin. Goeienaand, Mosterdgesin. Welkom hier so by ons. Sugar Daddy, hey brother, good evening. Mosterd gesin, hallo weer 'n keer. Amir, good evening. Double 3, that's an interesting one. Charlene says, have you ever come across someone who lost big through bad investments? Yes, I have actually. Charlene, I've come across a number of people that's lost big on investments. But every time I've come across somebody like that, it has been people that invested in what they thought was a good investment and it ended up being a pyramid scheme or a Ponzi scheme. There is, a few years ago, a number of clients that lost money on a property syndication, which is called Sharemax, according to the legislator and according to the company that's taken them over. There was nothing wrong with this company, but unfortunately it was closed down because the Reserve Bank investigated them. And those people still haven't received their money, although the company that has taken over says that the people will. So they have not apparently lost the money, but they haven't gotten anything. But there's been a couple of investments where people walked away with less. 15-20% less. That's been bad investments with insurers. But that has been instances where clients went through a dip. They invested, the market went through a dip, and then the client withdrew their money while it was in the dip instead of just waiting for it to come out on the other side. So I've seen losses like that. But like I say, it's been most of the times the people that I met with has been people that's been caught with a Ponzi scheme or a pyramid scheme. So I hope that answers it for you. Okay. Montlamacho, you say, I want to know more about unit trust and retail bonds. So first of all, unit trust and retail bonds are two different things, okay? So unit trust is where a company creates a fund, a unit trust fund, and they set up certain rules and they go and register it with the necessary legal body, and they say, okay, we are going to create a unit trust that's in mining and gold, for example. And then there's certain rules, and they say we will run this unit trust based on these rules. And then the portfolio manager, he goes and he buys shares in companies that's in mining, companies that's in gold, etc., etc. But he has to stick within that range. So if you choose a general equity fund, for example, then there's no limit on the portfolio manager. You can buy shares from any companies. And that's a unit trust. It's basically a collection of shares of different companies that's put together. You invest in the fund, and depending on how good that fund does, that's how good you do. Retail bonds, on the other hand, is basically where a company needs money to expand. And the company says, listen, yeah, I need R1 million to expand, and they go and offer a retail bond to the market, and they say to the market, okay, anybody that invests with me, give me the R1 million, and I will pay back the R1 million to you in, say, 5 years' time, and I promise to pay it back to you with an interest rate of, let's call it 10.5%. And that's a guarantee that they then give. So your return on your investment is based on the guarantee that the company that offers the retail bond gives. So that's the difference. The one is a bunch of shares that's put together as a collective, and the other one is a loan with a guarantee. Okay. So let's see, who did I miss? Nobody. Oopsie. Lach, bliksem, lach. You say, what the heck is going on? These things are jumping around tonight. I can't keep it to stand still. Best life insurance company out there. Okay, lach, bliksem, lach. So here's the thing. I am not going to be able to give you an answer with regards to that. We've got the biggest insurance company in South Africa. That's Old Mutual. The best insurance company, do you determine that on share price? Then I would say it has to be somebody like, I think Discovery would most probably be the best then. So it depends on how you want to justify which insurance company is the best. And I tell you one thing, as you speak with different financial advisors, depending on where they feel comfortable and the companies that they feel comfortable with, they will tell you, I believe that Momentum is the best. I believe Sanlam is the best. I believe Liberty is the best. So it's really impossible to go and give you an answer as to which is the best insurer. I can tell you what my favorite is, but my favorite is not going to be the same as the financial advisor that lives 2 streets down the road from me. And yeah, so it's very difficult. I mean, if you go and look at different companies, they've got different offerings. So one company you might find is better when it comes to their retirement annuities because of the bonuses that they offer and the rewards that they offer. Another company might be better in terms of their life insurance because of the benefits that they offer and how the benefits pay out. So I'm really not going to be able to give you a definitive answer on that one, okay? Okay, let's see what's next year. Oh, no man, sorry folks. Mosterd gesin sê, Corneille, gee advies op live of net comments? Ek te vraag op een van jou vids. Mosterd gesin, if you don't mind, I'm going to just translate this for everybody because most people listen is English. Do I just give advice on live or comments as you have asked a question in one of my videos? So when it comes to this live event that I do, I try and answer questions as comprehensively as possible. I never give advice because advice means that I actually tell you, go and invest your money here, put so much there, put it in this portfolio. So I try and explain to people how financial advice works, how it can be of benefit to you. And I try and give people guidance so that it just makes it easier for them to understand our financial world. But I do not give any advice on these lives that we have. So that's the first thing. The next thing is with regards to the videos that I do, it's exactly the same thing. As people ask questions, I try and answer them so that it makes sense and so that they have a better idea of what to expect, how it works, etc. But when it comes to the actual advice giving process, there I meet and I consult with people individually. So I'll either consult with you via a Teams meeting or Google meeting, or if you come to my office, we can consult there. And that is when I'll give you advice, because in that instance, I can actually take all the information I need from you. I can do a proper planning session based on your specific needs. And once I've done that, then I can give you actual advice. Then I can give you personal advice that's related to what your need is. Then I can say to you, you need a retirement annuity, you need a life policy, you need an income protector, whatever the case might be. So I hope that makes it a bit more clear as to what I do and what I don't do with these lives, okay? Alicia says, good evening, and tonight, I don't know why this thing is doing this, but it keeps on jumping around. Good evening, thank you for offering your time to... Oh, Alicia, it's a pleasure. It's a pleasure, I quite enjoy it. El Prima, how to get rich for dummies? Well, it's pretty easy to get rich. Number one, spend less than what you earn. Okay, that's number one. Spend less than what you earn. Number two, invest as much as you can and over a long period of time. You do those two things, you will become rich. I can guarantee you. But if you want to become even richer, then what you have to do is you have to go and improve your personal skill sets. So you have to go and improve your own knowledge. You have to read books. You have to educate yourself. You have to live a good lifestyle. When I say that, is you have to look after your health, your wealth, your psychology, your spiritual life. You have to find good habits. You have to find good, what's it called? I want to say processes, but it's not processes. It's like, make sure that you do the same thing every day. Be disciplined. And if you do that, you will find that you are going to get a lot of new ideas. You're going to find new avenues to make money, etc., etc. So I don't know if that's what you wanted to know, but I hope that it answers to a certain extent what you just asked. Let's see who's next year. Thank you for your explanation. It's only a pleasure. It's only a pleasure. What are we chowing tonight? Chicken, sweet potatoes, other vegetables, and mealies. But I'm not chowing yet, my wife is. Skibbity toilet. I don't know what you're saying to me there, brother. Lenny Skoll says, very informative for myself as a financial advisor. Lenny, then I am very glad. I love to help. I speak to a lot of financial advisors that contact me, both established and younger financial advisors, and I often help them out with advice and guidance. So if it is of value, I'm very, very happy. Lachbliksem Lach says benefit. Benefit of what, sir? El Prima, I'm not with you, brother. It's because they have a big building in Sandton. I don't know what you're talking about here. If you're talking, I don't know. Sorry. You've lost me there, but in any case. Wanderlust. Comments regarding arbitrage. So, I like arbitrage. That I can tell you, and it's because of all the investigation I've done on arbitrage, knowing how it works. I understand that it's a guaranteed buy with a guaranteed sell, and therefore there's a specific, what do you call it, a specific profit built into every trade. So I like arbitrage from that point of view. I do, however, believe that arbitrage, same as every other investment, has a certain amount of risk attached to it. And I do think that the risk on arbitrage is maybe a bit bigger than other investments. So on arbitrage, like I say, if you invest your money, you know that they got a guaranteed buy price and a guaranteed sell price. So your profit is locked in. So in terms of that, there's no problem. But in arbitrage, you have to trust a company, a specific company that has to do the arbitrage for you. And if you are putting your faith into one company and something goes wrong in that company, financially they're taking strain, somebody commits fraud, anything to that effect, then suddenly your investment is immediately at risk. So if you had 10 different arbitrage companies, for example, and a fund was created where you've got all 10 of these arbitrage companies in a fund, and you invested in that, then if one company went down, the other 9 would still carry you. And that would make it less risky. So that's the only problem for me with arbitrage, is I have to trust that company. And I don't have to tell you how many companies there are out there that looks fantastic, does great, everything is going, and then boops, suddenly something happens and that company goes down. And then unfortunately people that's invested goes down. So that is my biggest concern when it comes to arbitrage in terms of risk. Momentum have no momentum. Coincidence? El Primo, I don't know what you're up to, brother. You're having a discussion with yourself here, because I don't understand half the time what you're saying. Lach Bliksem Lach, what's your favorite? So you're talking about the companies again. I prefer Old Mutual. I must be honest, I prefer Old Mutual. I've been doing business with them for as long as I've been doing business with most probably all the other companies. And when it comes to them, I've never had a problem in terms of any risk products that it didn't pay out, investments that didn't deliver as they should, the cost on their products. So yeah, for me, I prefer Old Mutual, and I would normally put somebody there before anywhere else. Hola, Tema, First for Women. Leo, in terms of First for Women, I'm not a big fan of First for Women, because all they do is cancer cover. And when it comes to the cancer cover that they do for women, it's only for female cancers. If you go to any of the other insurers where they actually underwrite you in terms of your cover, you can take a similar benefit called a severe illness benefit, and then they don't only cover cancer, they cover a lot of other severe illnesses as well. So yes, I am not the biggest fan of First for Women, but I do believe that they also have a place in the market just as any other company. Do I prefer them? No. If I had a choice between them and a few other companies, I will most probably not invest my client there. I will invest my client somewhere else. El Primo, mate, I think you must go and join, I don't know, some other chat group where they smoke something lekker. What's your thoughts on the color red? I don't have no thoughts on that. Skippity toilet. I have absolutely no idea what you're on about. And others cause for consideration, consolidation. Lenny, I'm not sure that I understand what you're saying, because the previous comment I saw from you was very informative as a financial advisor, and now you're saying in other cause for consideration or consolidation. I'm not sure what consolidation you are referring to. If you can maybe pop in something more about what consolidation you're talking about, then maybe I can tell you. Naleen Naidu, hope you are in the best of spirits. Thank you, Naleen. I am. I'm just having a problem with El Primo here, who's talking all kinds of nonsense. And I wish you would just keep to what we are going on. El Primo, I'm afraid nobody can give you advice, mate. Naleen says, I'm retiring in 3 weeks. Still have not chosen my retirement options. So, Naleen, you want to? You're welcome to pop their message. I'll tell you how we work when it comes to giving you advice, what our T's and C's are, and we can do a planning session for you, and we can advise you as to what we believe will be the best options for you. The one thing I can tell you is, as you are retiring in 3 weeks' time, you have nothing to stress about. Your option forms that you are going to complete, okay, in order to submit to your pension fund so that they know how they must pay it out. They cannot start working on that for at least 7 to 10 days after the end of the month. because they must wait for that last contribution that you and the company made towards the fund. So if you finish at the end of the month and you get your income, then only 7 to 10 days later is that payment confirmed with the Pension or Provident Fund. And only once it's confirmed can they actually start working on the option that you have exercised. So if you haven't decided what you're going to do yet and you need some advice, like I say, you're welcome to come and talk to us, because you've got at least 4 weeks to make a decision. And here's the kicker. Even if you don't make a decision in 4 weeks' time, but you've got enough funds to carry you for a month or 2 or 3 months, be that in the form of savings, be that in the form of investments, whatever the case might be, then you can wait for another 2 or 3 or 4 months' time, and you can only make a decision at a later stage, because you only need to really make your decision when you need the income or when you need the capital. But if you've got enough liquid capital that will carry you for a specific period of time, no problem. Then you've got more than enough time. You are only under pressure, literally, if you are going to need an income by the end of next month, because you'll still get an income this month. So by the end of next month, if you're going to need an income, that is when you need to make sure that you have made your decision. Okay. What's it saying? Lou says, what's your advice regarding buying old houses, renovating, flipping them, and making a profit? Lou, I don't have advice with regards to it, because it's something that I won't do. It's something that I won't advise anybody to do. It is something that I don't believe in. Buying property and making profit out of property is very difficult, according to me. You have to run it like a business. You have to understand the market. You have to understand how business is being done. And just based on my personal history with clients that has gone into property deals and whatever the case might be, I've only seen tears and heartache. I know a lot of people take me out on social media because I keep on saying that property is big risk. It's bigger risk than what high risk portfolios are. That's my honest opinion. As a matter of fact, buying property is almost as risky as starting your own business. And starting your own business is most probably the second riskiest type of investment that you can do. So my personal opinion, no, I won't do it. I know that there is potential for business in there, but I will never advise anybody to go into that. I've just seen too many people literally go bankrupt because of property deals. That was new. Nalene, do you think a 5-year or 20-year monthly income is more advantageous? Nalene, I can't tell you, my dear, because it depends on a lot of things, such as, is it just for you? Is it for you and a spouse? Is it for you, you and a spouse and kids? Do you need to leave capital behind, or do you have to leave income behind? Do you still have debts that needs to be paid off? What is the income that you need? How much capital do you have to buy this income? Do you need the guarantee? Don't you need the guarantee? So like I said, there's a lot of different questions that one has to ask. What I can tell you is, the shorter the guaranteed period, the higher the income will be. But if you take a short guarantee period and somebody is dependent on you and you come to pass away in a very short period of time, the person that was dependent on you has got a problem for the rest of their lives. So there's pros and cons each way, but it depends on your personal need, your circumstances going forward, what you should and should not do. And therefore, I honestly can't tell you whether a 5-year or 20-year guarantee is going to be the best for you. So Darlene, just adding on to that, we saw also if I die, once again, it's going to depend on, in the event of your death, do you have financially dependents on you? If you don't have anybody that's financially dependent on you, you can take a 0-year guarantee and you will get the biggest possible income. But if you've got financial dependence, then you have to go and find something that's either going to protect some capital for them or some income. And once again, that's why I say it depends on your personal circumstances. On a forum like this, I cannot even try and make a recommendation based on a couple of questions. Cindy says, hi there, I have 2 title deeds for flats. How can I leverage them? Cindy, I don't know. I honestly don't know, and I don't think one should be leveraging property, because leveraging basically means I've got 2 properties, let's say both of them are 500,000 rand worth, so it's 1 million in total, and now I want to do something to get more money out of it or get a loan or whatever the case might be. If you take it and you leverage it and said that you put it down as security, all you're doing is you're getting yourself more debt. So who wants that? If you've got 2 properties with 2 title deeds and you're trying to rent it out and make an income from that, and you're not making enough, then what's the use? In terms of your properties, like I say, I'm not the biggest fan, and I have very seldom seen positive results when it comes to property. Therefore, I do not like property, and I don't advise people to go with property. Nalene says, if I die before the 5-year period, I believe my pension will be distributed to my beneficiaries. That depends, Nalene. If you've got a 5-year guaranteed and lifelong thereafter, okay, let's start there. If you've got a 5-year guaranteed and lifelong thereafter, and you're the only person on the investment, and you die in year 3, that income will pay to your beneficiaries until the end of the 5th year. Then it stops. So if it's a guaranteed 5-year, at the end of the 5th year, it stops if you died in year 1, 2, 3, or 4. If you live past the 5 years, okay, and you live to, let's say, 10 years from now, and you then pass away, the income stops with immediate effect. Then there is nothing left. So that's on the guaranteed side of things. If we're talking living annuity side, where you are drawing an income, a percentage income, then in the event that you pass away, irrespective of whether it's 5 years or 10 years or 15 years, whatever capital is left in your living annuity, that then gets distributed to your beneficiaries. So what's the problem with the living annuity? Number 1, it's not guaranteed. Number 2, it is based on a percentage income that you are taking. So if the percentage income that you take is too high and higher than what the actual growth rate is that you get, you will exhaust your capital. So once again, Aileen, I think what you need is you need to sit down with somebody that can explain the different options to you, and depending on what your needs is, then to help you make the correct decisions. I think I've just answered this for you. What happens if I die after 5-year period with NTRF? Now, I'm not sure what NTRF is, if it's a specific pension fund, but depending on whether it is a specific pension fund or not, if their guaranteed period is 5 years, then exactly what I explained to you now will happen. If you die within the 5-year period, your beneficiary gets the income until the end of the 5th year. If you die after the 5-year period, your beneficiaries will get the income. Your beneficiaries won't get any further income. Okay. I have the weirdest TikTok live tonight with people saying the weirdest things. I have never experienced this. I swear, this is this is weird past. Mbov, I have 2 wives. Can I register them both for the GPF monthly pension? You can actually. I must be honest with you, this is one of those technical questions which we do not get very often, and I'm gonna lie to you if I have to try and explain to you how the pension fund will work. So you have 2 wives. You can put them both on as beneficiaries. It will be recognized, it will be acknowledged, but it doesn't mean that they will get more of an income. So as you know, with the GPF, if you pass away, then your spouse receives 50% of the income going forward. It will still be 50% just being divided between the 2 spouses. So yes, you can, but it doesn't mean that they are going to get more income. Wanderlust. If you can find it, take advantage. You'll benefit immensely. It's helped me a lot. Champ, Wanderlust, what? Are you trying to promote something here on my TikTok live? Gee, because if that's the case, then, oh man, I think you're wasting your time, and I think it's a disgrace. Jock. Hi, what do you think about tax-free savings invested in unit trust or ETFs instead of savings account? Jock, I actually think that investing it in unit trust or an ETF is a much better option than making use of a savings account. If you take your tax-free savings account and you make use of a unit trust, preferably then, the unit trust must be a unit trust with a higher or a more aggressive approach to growth. And what I mean by that is you can get unit trust portfolios, which is stable portfolios or income portfolios, which means that the return on investment you're going to get is going to be basically the same as what you will get on a savings account. So you want to take a unit trust that's got some equity exposure, and that would preferably give you inflation plus 4 or 5 to 7%. So it means you have to take a bit more of a risky unit trust, but it shouldn't be a problem, especially if you've got time. The longer time you've got, the more risk you can take. The same with the ETFs. If you want to take a tax-free investment in an ETF, just make sure you make use of an ETF that is more aggressive than a bank savings account, which will allow you for substantially better and more growth. But yeah, I'm not a big fan of tax-free savings accounts in the bank as such, because to me, let's say you do have a tax-free savings account at the bank and you get 7% interest and our inflation is 6%. You're beating inflation by 1% and you're not paying tax. But if you've got it invested in a unit trust or ETF, and there you're getting, let's call it 10% return on investment. Now you're beating inflation by 4%, also tax-free. That is the type of growth you want. You are then substantially better off, and that's the idea of the tax-free savings account. Not only that you are saving on taxes or not being taxed in your investment, but also that you're getting better growth. So yes, I'm 100% with you. Don't do a tax-free savings account, rather do it in the form of a unit trust or an ETF. Can you please assist my friend? She was advised incorrectly on how to invest a pension payout now. So yes, it's possible that we can assist your friend. First of all, any type of investment, life cover, whatever the case might be, if you do it, you have got what the legislator says is a 30-day cool-off period. Okay. So if they are still in the process of processing the documentation and it hasn't come into effect yet, you can cancel it outright. But if the option that they've given her with a pension, you believe is the wrong option, then from the day that they issue that pension, you've got 30 days to say, no, go and cancel it, pay the money back, I want to do something different with it. So if that pension option that she's exercised falls into one of those two categories, either not issued yet or within the 30 days, one can stop it, reverse it, and you can go and choose a different option. If it's past the 30 days, okay, then you can't reverse the process. But now, if it is in the form of a guaranteed income, you're also stuck, it's over and done with, you can't do anything about it. But if it's in the form of a living annuity, then you've got a choice with that living annuity to go and make changes. If it's just an income change, you unfortunately have to wait until the anniversary date. If it is a fact that you actually want it in a guaranteed plan, you can change the living annuity into a guaranteed plan. If it's not with the right company, you can move it to a different company. If it's not the right portfolio, you can move it into a different portfolio. So, except for when we pass the 30-day period, and if it is in a guaranteed income product, except in that instance, yes, there is possibility to make changes. And yes, I suppose we could advise her if we can consult with her. Okay, so that's how it works. What did I miss? I think I've just explained that to you. Yes, there is something. Is it legal for the FSP to remove the advisor from the register without communication? Man up, Kings. It is legal in certain situations. So if the advisor committed fraud or made themselves guilty to a criminal act or something like that, then yes, the FSP can remove the advisor without communication. And this happens every now and again because if a financial advisor has been dishonest or has committed a crime, they cannot be reached because they're running. And in such an event, the FSP cannot take the risk of keeping the advisor on record until they can find him. So in such a situation, yes, you can remove the advisor from the register. No communication is necessary. You just have to inform the FSCA as to the reasons why you are removing that advisor. And 9 out of 10 times, the FSCA is going to say, thank you very much for keeping the industry clean. That person is off and gone. NTRF is with Momentum. Your experience with Momentum as opposed to Old Mutual. As a matter of fact, Momentum, I have had some good experiences, especially on their group benefits. Their funds at work, I needed to just find the word for a second. Their funds at work is a good administrator. The administration is good. I find the communication is good. The portfolios are good. So, yes, I don't have much problem with Momentum. I think they are pretty good as a company. They took over Metropolitan a few years ago, and Metropolitan was already a good fund administrator. So they gained that experience and they gained that knowledge and everything. So, yes, Nalene, NTRF, if that's with Momentum, then I think you are in good hands if you are still with them, so to speak. Lenny says, don't you feel that it's scary how people cancel the policies they have in place for years? Lenny, it is. And you know what, Lenny? It's my personal opinion that the financial advisors is to a great extent responsible for that. It is my opinion that if a financial advisor does not do proper annual reviews with his clients, re-educate his clients, tell his clients again why they have it, explain to them as to why they took it out initially, show in their planning why they need it, yes, then clients are going to cancel policies, because if I don't get advice, if I don't get service from my financial advisor, then I run the risk that when I speak to another financial advisor, that other financial advisor is going to tell me whatever they can in order to get the business. In our industry, that's one of the things that actually is very heartbreaking. It's the amount of churning, as they call it, whereby advises clients to cancel life policies and take out a new life policy because this new life policy is so much better than the old policy. And it's done, according to me, in most cases for the commission, not for the actual product that's better. So Lenny, yes, it is scary, I must say, and I'm not bragging here, but I've got very few clients who actually cancel their policies. And I think I'm in a very fortunate situation that most of my clients normally contact me before they want to do something like that, just so that we can refresh why and where. And if you give clients good advice and you do regular follow-ups and you do reviews, no problem. Naspers is still a good investment. So Champ 17, my mate, I do not do shares, okay? So I can't tell you individual shares if they are good or not. But what I can tell you is that Naspers is still one of the strongest and biggest companies in South Africa. Naspers has always been able to change direction. So they are not a stagnant company. They've got multiple companies. They've got multiple income streams. So yes, I think it's still a good investment. I can't tell you how good, but my personal opinion is, especially if you are an investor in South Africa, in South African shares, you most probably very, very well off by being invested with Naspers. Oh my goodness. Linda Nolte, what is wealth bonus? Wat is 'n wealth bonus? As jy kan verduidelik asseblief. Linda, if I'm not mistaken, the wealth bonus is from Momentum. Okay. So, I'm not going to be able to give you the exact explanation because I do not know how all the different companies' bonuses work. But this is basically what it comes down to. A company has given you an investment and they want you to stay with them and invest with them. So let's say you are contributing R1,000 per month to your investment and you've taken a retirement annuity, because it's very often on retirement annuities, and you have to pay this retirement annuity for 25 years. Then they say, okay, if you pay it every month and every year, we will give you a bonus, meaning that after a certain period of time, for some companies, it's after 5 years and then every few years thereafter. For other companies, it's only right at the end after the 20 or 25 year period. But basically what it comes down to is they say, if you stay committed and invested with us, and let's work on the 5 year example. If you stay committed and 5 years down the line, you're still paying your investment, we're going to look at what you have earned in terms of growth. And let's say you've earned an average of 10% growth. We're going to add an extra 10% on there. So you've had 10% growth. We're going to give you 1% because that's 10% of 10%. And therefore, you've now got 11% growth. So they actually incentivize you by giving you more growth on your investment for sticking with them. So in a nutshell, that's what the bonuses are all about. Now, the only thing is that if you go and look at the different companies, Old Mutual, Discovery, Liberty, Sanlam, Momentum, you can run through them as you go. Each of these guys offer these bonuses, but all of them have a different way in which they structure it. And some companies is better than other companies. That's my opinion. When you go and speak to a company, and this is just how wonderful it is in our world, if you go and speak to Sanlam, they will explain to you why their bonus system is the best ever. If you go speak to Old Mutual, they will tell you why their bonus system is the best. If you speak to Discovery, they will tell you how their bonus system is the best. It depends, again, I would assume, on how the explanation is done and where you feel comfortable which company is really giving you the best. It's almost like having to decide whether you're going to buy a BMW, Audi, or Mercedes. All three great cars, but you might have a tendency to like Audi more than BMW or Mercedes. So if you go and you shop for a car, no matter what these salesmen tell you, you might just tend to go with Audi. Or you've got three different salesmen and all three of them are great salesmen, but the Audi salesman is just a better salesman and he sells the features that are similar to BMW and Mercedes better to you. You will believe that that's the better one. So I cannot really tell you which is going to be the best one, but that gives you a pretty good understanding of what the wealth bonus is all about. It is a bonus that you get for staying committed and invested. Hope that helps, Linda. Rory Sang says, let's talk about Sasol. I don't know what you want to talk about when it comes to Sasol, except that Sasol is Sasol. So can't really tell you anything more. Remember what I keep on saying. I don't do share trading, folks. I do not do share trading. I do not look and follow specific shares on a day-by-day basis. Okay? So, quite frankly, I don't really care what happens to Naspers or Sasol or Harmony Gold or any of those companies, because that is a job that I leave to the portfolio managers who manages the investments that I do. Because that portfolio manager, he's got a team of 50 or 100 people that has to do all the research, that has to check the markets, that has to follow the politicians, that look at all the various impacts that will possibly make a share good or bad, that has to look at that company and how their management style is, whether they are looking like they are going to expand or looking like they're going to fall, whether they have got a good business plan. That's somebody that wants to buy and sell shares. That's what you have to do. You have to go and do a hell of a lot of investigation. And I don't do that. I go and choose a portfolio that's got a risk profile that's in line with you and your needs, and then I put you in that portfolio. And then that portfolio manager, whatever he buys and sells in terms of shares, that's his problem. He is the guy that has to make sure that you get growth on your investment. If he doesn't do it, he loses his job. And yes, you could be doing better by buying and selling shares and picking the right shares. But personally, my opinion is, I don't want to go through that headache. I don't want to go and sleep every night wondering whether my shares are going to go up or down. Anyway, guys, Rory Sang, before we talk about Sasol, I thought I'll just put that in there, then you understand where I'm coming from. Oh, Charlene, which is the best company for car insurance? That's basically the same as asking me which is the best company to do, I don't know, to do your bond through when you want to buy a house. I can't really say that there's a best company. We do a bit of short term in our company, and we deal with a variety of short term companies. And I have honestly not had many insurers that has not paid out. So when it comes to car insurance, it's the same as with house insurance and stuff like that. You must, sorry folks, there's a fly around my head here. You must just make sure that the car insurance that you've got, that you've taken the right car insurance. For example, that it's comprehensive car insurance. That if you need it, that you've got top-up cover. That if you need it, that you've got car rental. That if you need it, you've got, what do they call it, that tire cover. Depending on what you need. So as long as you, whichever company you use for your car insurance, as long as you make sure that you've got the right cover in place for your specific car, you shouldn't have a problem. Any company that says, okay, you've got comprehensive cover, and then something happens that is covered by another insurance company, and they say, we're not going to pay for it, but it's also comprehensive cover, that short-term insurer won't last very long in the business, because before long, 2 or 3 people is going to report them. The ombudsman is going to look at it and say, hey, you gave comprehensive cover. Company A, B, and C would have paid for this, and you don't want to pay. Get out of here. Daniel says, what retirement annuities can a 35-year-old take up that would ensure an okay retirement? So Daniel, the type of retirement a 35-year-old can take that will ensure an okay retirement is any retirement where you are actually saving as much as you should be saving. And what I mean by that is, if you sit down, you say, okay, I want to retire at the age of 65. That's 30 years from now. And I want to retire with a monthly income that is going to be equal to 20,000 Rand in today's terms. So if I had 20,000 Rand tomorrow, whatever I can buy with 20,000 Rand tomorrow, that's what I want. So at the age of 65, I want an income that's equal to 20,000 Rand in today's terms. Once you've got that two things, 30 years and 20,000 Rand, then one can go and calculate and say, okay, you need to start saving 5,000 Rand a month for argument's sake. And that retirement annuity will then ensure that you have an okay retirement. because then you are saving enough over the 30-year period to build up enough capital to give you an income that's equal to 20,000 Rand today, and then you have an okay retirement. So the retirement annuity is not dependent on which company's got the best retirement annuity. It's dependent on, are you saving as much as you should be saving? That's what it's dependent on. And yes, then obviously the portfolio that you invested in is important. You want to ensure that you've got a portfolio that's going to give you the good or the good or the best possible return on your investment. So you want to ensure, goodness gracious, where this thing came from. You want to ensure that the portfolio that you've got is going to give you potentially the best possible return, which will make your retirement just better. Rory Sung says, hi, what do you think about tax-free savings account invested in unit trusts or ETFs instead of savings account? Rory Sung, I answered that question earlier. I don't know if you decided to leave, but I told somebody it is a fantastic idea. I think it is better than doing it into a bank savings account. Mark Lee says, I have 2 retirements. Is it advisable to take both 1/3 at the same time? One GPF and one Old Mutual. Mike Lee, it really doesn't matter. Whether you take one at a time or whether you take both at the same time, that doesn't matter. And the reason it doesn't matter is, in terms of your 1/3, okay, you get 550,000 tax-free, irrespective of whether you've got one plan or 20 plans. You get 550,000 tax-free, and then the rest is taxed on a sliding scale. So it doesn't matter how big your 1/3 is going to be. It also doesn't matter how big your income is going to be, because you get taxed based on the income that you're going to get. So what it is dependent on is, do I need all the money now? Do I just retire from the GPF and then I can wait for another 5 years and then retire for my retirement annuity? Do I need all the money now? What's my personal needs? What are my personal circumstances? So there's definitely no right answer in saying it is advisable or it's not advisable. Whether it's advisable or not is going to depend on what your personal circumstances is and what your personal needs is. That is what's going to determine whether you should resign or retire from both or just from one at a time. Okay, let's see. Andre says, thanks for your wisdom. Thank you, Andre. I appreciate it, mate. Is it wise to take all the money and invest it somewhere? Just Jay, I don't know what all the money is that you're talking about. But yes, I would say, if you can, take all your money and go and invest it somewhere. Yeah, sorry. I don't know if you're referring to a specific amount. But yeah, my thing is, whatever income you earn per month, okay, the first thing you should do is invest. So let's say you earn, once again, let's make it 20,000 Rand a month. The first thing you should do before you pay anything is you should invest 10%, 2,000 Rand, put it away. You must learn how to live off the rest of the other 18,000 Rand. So that's where financial discipline comes in. That's where the budget comes in. You should be able to say, I earn 20,000 Rand a month. Before anything else, I'm going to save 2,000 Rand. Then I'm going to buy my car, rent my house, groceries, whatever. And all of this must be less than 18,000 Rand. My partying, my dop and chop, everything must come out of that 18,000. But the first thing I have to do is I have to invest money first. And if you can invest more, you will be better off. Andre says, what would you advise for investments if not property? Andre, there are so many investments out there, mate. For the person that doesn't want to worry about anything and just want to put their money away and let it grow all by its lonesome self, and 20 years down the line reap the rewards, endowments, retirement annuities, unit trust, exceptional. For the person that says, I want to do that, but I also want better growth and I'm willing to take the risk that goes with it, alternative investments, arbitrage, great opportunities. For the person that says, listen, yeah, I want to play around with my money myself, I'm willing to take the chances that goes with it, shares, crypto trading, plenty of options. For the person that says, listen, yeah, I actually want to be invested in my own investment, start your own business and create your own business. So Andre, there's really so many different opportunities over and above property. And once again, you can use property. It's just not my favorite. I'm not a property fan. Linda say, what is die health bonus by Sanlam? Wat is die doel van dit? Linda, wealth bonus of Sanlam is basically exactly the same as I explained earlier when I referred to Momentum and Old Mutual and everybody paying out the bonuses. It's the same thing with Sanlam. Sanlam just says, retirement annuity, at retirement, I'm going to give you a bonus. I'm going to give you more. So you get to retirement and let's say you've got R1 million in your fund. And you've been a good person, you've paid every month, you've never slipped anything. They're just going to say, because you were so good, here's a bonus. You don't have R1 million now, you've got, I don't know how much the bonus is going to be, but you've got R1,050,000. So now you've got more money to retire with. That means you're going to get a bigger income. So it's the same thing. It's just bonuses that they offer you for staying committed to them and to your investment. Let's see. Oh, Andre, you say, never mind, I hear something that has a guarantee. So, Andre, I always say nothing in the world is guaranteed. People like to think that savings account with banks has got a guarantee. Yes, the bank says to you, I'm guaranteeing you 9% interest. But if that bank closes its doors tomorrow, then that guarantee means nothing. Then it depends on the bank that's taking it over and them taking over your investment, what your guarantee is going to be now. That's what happened years ago with Santam and Allied and Trust Bank. When those guys came together and formed one bank, people that were getting a certain income or percentage had to make you deal with the lesser percentage. If you want to buy a guaranteed income, that's most probably the best guarantee you're going to get, because that guarantee is backed up by bonds and certain other guarantees that these guys buy. But that's about the only guarantees you're going to get. Bonds and savings account with banks, which is guaranteed for as long as the bank is strong. And yeah, Andre, depending on how old you are, guarantees is way overrated according to me. Very few people should actually make use of guarantees. And normally guarantees is something that should only be taken by somebody that's in a retirement or going into retirement. Gents, I've got a couple of minutes left, ladies and gents, so let me see here. Herklaas, hi, is it better to put extra monthly into my provident fund or must I put it somewhere else? So Herklaas, it's going to depend. There's lots of places that you could potentially put it. If you've got a bond, that might be a good place to put it. If you've got a retirement annuity, that might be a good place to put it. If you've got debt, it might be better to pay off your debt first. The extra money that you want to put in monthly is going to depend on your personal circumstances. For some people, it's better to get out of debt. For some people, it's better to put it into these pension funds or provident funds or retirement annuities and get more tax back. For some people, it's better just to go and put it into a different investment because they don't need the tax rebates and they can make use of a more aggressive portfolio and get better growth. So where you're going to put it is going to depend on what's going to work best for you based on your personal circumstances. And then last but not least, she's going to be getting 2.5 a month for the rest of her life. We're back to your friend. Once again, sir, I don't know what she's got. I don't know if she's got a living annuity or guaranteed income. I cannot tell you what can or cannot be done. If she wants to change it, get to a financial advisor ASAP that can help you to stop the process or to just see if it was a good option that was offered. Okay. Ladies and gents, Tribal says, please explain about taking all the money to Sanlam, disadvantages of investing. I don't think there's any disadvantage to investing it with somebody like Sanlam. Sanlam is a very good company and they've got very good products, a very good portfolio. So I cannot see any disadvantage taking it to them. If you invested in a good product with them, with a good portfolio, with good returns, there's no disadvantage, only your advantages. Lauren, how do you feel about Fed Group? I'm thinking of taking endowment with them. Lauren, I haven't dealt with Fed Group for ages, purely because Fed Group at some stage kind of disappeared and then they came back. I believe from what I've heard, but I haven't checked it out, that apparently it's a good company now. Personally, I cannot make a comment on the Fed Group. Quentin says, will finance houses have to drop the layers of fees to compete with the likes of Easy Equities, I suppose? No, Quentin, they won't have to. Because when you do something through Easy Equities, it's your own personal advice you're following. When you are doing something through an investment house, you are making use of a financial advisor most of the time. And the advice that that person gives you and the value for money that they give you is most probably going to be a lot more worth than the bit of savings that you get in terms of fees. So no insurer will ever have to do that. I can guarantee you that. And folks, let me just do this. Where's the puzzle piece? Quentin says, RA, SA based with global split versus US stock exchange and USD. Yes, if you've got an RA, remember, you can only have 75% of your RA invested in equities, that means shares, and then only 40% of that invested globally, whether that's US stock or whether it is UK, whatever, doesn't matter. But yes, Quentin, it is my advice to anybody that goes into an RA that they expose themselves to the maximum equities and global equities. If it is in line with what their risk profile is. Some people just can't stomach the risk, and then for them it's not worth it. Mark Lee, I've answered this question, mate, about the 1/3. In terms of life insurance, would you encourage taking a product that's premium is fixed from 65? Wayne, if you're talking a product that's fixed from the age of 65, I suppose you are just taking it out at the age of 65, because you can't pick a product that has got annual escalation of say 5% and then at 65 it suddenly stops. And if you're taking something at the age of 65 and you can afford it, yes, then it's good. But once again, it comes back to your need. If you just need that life cover for 5 years, because you need to pay off a bond until the age of 70, then why take a level term or a level premium? Then you can start with an age rated, which is cheap. You're only going to pay it for 5 years and then get rid of it in any case. So it depends, again, on what the circumstances is and your need. I know that with all these questions, folks, Wayne, all these questions, when people ask, it's a general question for your personal circumstances that you want an answer on. But I can't give a general answer for your personal circumstances if I don't understand your personal circumstances. So it's always very difficult to advise. So I'm trying to give guidance and saying, yes, you can, no, you can't, etc. And I've got one or two, and then I have to run, folks. Majoko say, hi, sir, when you retire at 55, you get half of your salary. When you reach 60%, you will get the same. Hi, sir, when you retire at 55, you get half of your salary. When you reach 60, you will get same salary. Majoka, nothing about your sentence making sense. Yeah, what I can agree with is your second statement. When retiring early, it's difficult. You really feel it. That I agree with. Don't go early. I keep on telling people, don't go early. If bank goes down, only guarantee up to 100,000. Desi, if you say so, I don't know. I don't know bank products. I just am not a fan of bank products. I was in the bank for about 2.5, 3 years. And everything I learned after that told me that bank products are normally not good. My daughter's going to work abroad. There's no pension fund. What would you recommend she do? I can recommend that she then talks to me, because there's plenty. For people working abroad, because they're earning in dollars or pounds or euros, because of the circumstances there, most of the time, those people can actually put away substantial amounts. And especially if they're going to come back to South Africa, those amounts that they put away and the growth that they get will outperform any type of pension fund that they would have had in South Africa in any case. And you don't want a pension fund because you're not going to benefit from any tax rebates. So what I do recommend is that she then talks to me, and I'll tell her on what type of investment she can do, how she can do it, that will benefit her for the day that she comes back, if she's going to come back. Alternatively, what will be best for where she is. Thank you very much. Okay, ladies and gents, the last comment here tonight is from Munchoba that says, thank you for the live. I've learned a lot from you. By Donkey. It is my pleasure. I really enjoy what I'm doing. Thank you, everybody. Have a wonderful evening. I am going to have supper and then I'm getting into bed. Good night. Keep well.